Welcome to Volatility 411 for Equity Armor Investments. I am Joe Teague coming to you on Groundhog's Day in August as the market seemingly grinding higher again, especially the NASDAQ. The NASDAQ going up, CRM, great earnings yesterday, maybe some tech stocks, some cloud stocks getting some sympathy rallying. We got Netflix rallying as usual. We got Tesla rallying on a battery. We got Apple rallying on a split coming up. So there's a lot of stocks rallying. Not sure exactly all of them are very justified, but it doesn't matter. The only thing that matters is the price. And if they're going up, you can't fight the tape. The Fed is certainly keeping these rates low, certainly intent on getting inflation. The Fed is forcing investors into these risky assets, and they're responding accordingly. Now, I think we have to just come to the realization that inflation is happening in the economy, whether it's showing up in some metrics or not. It's certainly happening out there, and of course it's showing up in equity prices. So that's what we're watching right now. Will the earnings be there in 2021? We'll see, but for now we're seeing inflation, and to me that could be a concern. I am not comfortable owning stocks without a hedge. And if you look out there, I think a lot of other investors are thinking the same way. Now, the VIX itself is at 22 right now. That is very elevated given the fact that we're at an all-time high. That's extremely elevated. I know it's lower than it's been, but it's elevated. And looking out into September and November, October too, we're seeing elevated futures. We got the September future above 25. Of course, will be after Labor Day once that expires. September is the most negative month of the year historically. Then we have October up at 29. October, historically a very volatile month. So there's people putting bets that the volatility will return come October, and we all know the election will be in November. That's another reason why those October futures are bid up. Also, you look at the SKEW index, that's at 146, so people are paying a very high premium for those downside protection puts. So there's a lot of people putting money to protect their assets with options right now, and I am no different. I think this market is too risky right here. Now, it might be 6 months, it might be a year before a correction or a bubble burst happens, but for me, I like being long the market, but I need to be hedged. For Equity Armor Investments, I am Joe Teague.